Hi everybody, welcome to another update on the stock screener. I was looking at Fortuna mining. It's down 11% after earnings, and I want to know why. So let's take a look. I was looking at the financial statements. So that's the first thing to do. Always look at the balance sheet. So we have how much cash? 577 million. And 658 million liabilities. Just a quick estimate. This should be 2025. Okay, that's the balance sheet. Doesn't look too bad. Now let's take a look at this thing here. So they are selling Yaramoko. That's important. So they are getting 70 million plus cash dividends. Okay, so how much is this? 127 plus 50, 107, 180, 180 million, 130 million, the right to receive up to 53 million. Let's give them 180 million, okay? So let's do this somewhere here. 180 million minus 180 million. So 180 million cash plus dividend plus VAT from Yaramoko. Okay, but that's important. Yaramoko had 2-year mine life. It has a production of 112,000 per year. Yes. So when are they selling this? Second quarter. Yeah, we are already in the second quarter. So let's just delete some production here, and let's delete 90,000 here, and then 112,000. And here minus 112,000. until here. And then we have 220,000 production. So coming from this and this, that's 220. Yep. So there's still two mines left, Seguela and Lindero. This one is sold. This one is also sold. I don't know which one, but one of them were sold, and this is just a low mine life, 5 years. Okay. And basically production is not that much, 80 to 60. Yeah, but why is it lower here than here? Not sure. 295. Yeah, 226 plus some of these. It's 295. And I'm not sure. Maybe I already deducted this from here. Yalamoka is already gone. Lindero 226, and then yeah, it should be 295. Yeah, I think I already deducted it. Probably. And then here it's only two mines. Yeah, only the two mines. So it's about this production profile going down. Let's see how much they produced this quarter. 100. So 400,000. 400,000, yes. And then minus the 90,000 because they sold Yalamoko. Yep. So this is going to be like this. Only sustaining costs 1640. That's about this level, 1640. But important, they sold Yalamoko, and Yalamoko had an only sustaining cost around 1,300. So they're now left with the high costs Lindero and Seguela. Let's see. What's the only sustaining cost of Lindero and Seguela? Seguela is 1,300 only sustaining cost. Yeah, it was 1,200. Now it's 1,290. So 1,290, bit higher. Yalamoko is pretty low cost, is sold 1,400. So it's actually rising in only sustaining costs, 1,400 now. Then Lindero is 1,900. Yeah, it's also rising. Then we have Peru, Kailoma, 18.74. 18.74 times 100, 1874. Well, 1874 times, maybe they used 85 silver. Yeah, it's basically the same, 1600. Okay, so they deleted Yaramoko, which means the all-in sustaining cost is comprised of this and this. Um, 1300, 1900, and 1600. If you take half, then we have 1900 plus 1300, and then divide by 2 is 1600. So yeah, it's about 1600 all-in sustaining cost. Yes. Which is kind of weird because Kailua, Peru, 1600, 1400. Half of this is 1600. So why is it 1650? I don't understand that. Yeah, maybe because it's a bit higher here, a bit higher here. So anyway, I think without Yaramoko, this is going to be 1600. Minimum 1600 now, because Yaramoko is gone. Okay, so now we have only this and this and this. And then from here on out, we will also have 1600 because of this and this, right? It's not too bad, it's still fair value. And then get some cash here. What was the interest payment? Finance costs 12 million. Yeah, okay, 12 million. So this is about the situation. I don't think this is bad. Let's put this in here. EV. $1,667. Okay. PE of, yeah, this is PE of 4 to 5. PE of 4.5. And here 3.4. But that's because the production, yeah, production should be 300,000. Because they sold it. Let's do this. 300,000. They sold the mine. And now the EV is 5. That's more like it. Capex is, I have taken 22 million. So what is the capex now? Uh, 15 million growth capital times 4, 60 million. That's quite a lot. That's quite a lot. It was 5 million last year. Now it's 15 million. And it was 12 million in December. So why is this capex so high? That is the problem, I think. 15 million. So that's 3 times. So it was at 5 times 4 is 20 million. So that is why I had 20 million. But now I see it's 50 million times 4 is 60 million. So this here has gone up to 60 million, and that will, yeah, increase the EV to free cash flow. And I think I know why. It's because of stripping. Yeah, probably due to stripping. Yeah, also stripping and advancing of tailings. So more costs, more capital expenditures. And here Lindero, leach pad expansions. So basically, capex is up. You can see it here. You can see it from growth capital and here as well. Let's say 50 million going forward, because it's probably not going to stay like this. Let's say 50 million for the coming years. Doesn't change a lot, but it's something. Okay. What else? Let's say I mean, it's not bad. It's fair value to me. A PE of 5 to 6. All-in sustaining costs 1650, 16, yeah. 1600. It's a bit high. In 2028, it's still going to be 16 because they sold Yaramoko. So yeah, so this is the end result. Not bad, but it's also not that great either. When we look at the overall chart, Fortuna mining is here. So the upside is only 22%. That's not a lot. If we go to 4,000, Fortuna mining is up 50%. That's not a lot. To compare this to these high flyers, Soma Gold would be up 6x 6 bagger, and this would be a 4 bagger, Zerabi Gold. So I would not be buying Fortuna Mining at this point. I would rather buy one of these: Jaguar Mining, Step Gold, Zerabi Gold, Soma Gold, and more speculative these ones, but they are not in production yet. Even Luca Mining looks better. And then some of these. Okay. So that was the intermezzo on Fortuna Mining. Not sure why it's down 12%. Probably because of the capex. But other than that, I think it's fair value. Probably going to hover around here, depending on the gold price. But it's not going to do a lot. Okay, I'll see you next video. Bye.